Okay, we're gonna kick things off with our last panel session of the day here. Thank you all so much for hanging in there, and we'll have the reception right after this, so don't go anywhere. All right, as we just heard, nuclear energy projects face some of the toughest financing hurdles in the energy sector. While federal tools like loan guarantees and incentives may help, the path forward will also require strong private sector participation. Our last panel today will explore strategies to de-risk projects, attract investment, and build the partnerships needed to scale nuclear energy. I will turn it over to our panelists to introduce themselves. We can start with Cassie.
Good afternoon. Hello, everyone. I'm Cassie Powers. I'm Chief of Staff at the National Association of State Energy Officials, or NASEO. We represent the governor-designated energy offices in each of the states and territories, and we support them as they help to inform and implement energy policy, program, and planning in their states. And in this particular realm, the energy offices are helping to implement a lot of the nuclear goals and work set by their governors and their legislatures. NASEO launched a Advanced Nuclear First Movers Initiative in February of this year, where 11 states, on the behest of their governors, committed to working together to help to de-risk investment in nuclear projects. And so I'll be talking a little bit today about some of their activities, including an RFI that was released just last week to get some strategies on how to develop an order book. So glad to be here and to be panel.
Yeah, good afternoon. I'm Kevin Plunkett with JP Morgan. I head our public power team, which is basically the group that works with municipally owned electric utilities around the country. We work with some state utilities, city utilities, sort of the governmental sector in the energy world. Early on in my career, I worked on the first 160 million borrowed by MEAG Power for the Vogtle project. That was in 2009. Sort of have seen the evolution of that project, and it's great to be here today talking about new projects once again. Also just want to recognize Jennifer Spall from our team. I think she's been our key liaison with the WGA, and I know it's been a great partnership. So great to be here with you all, and look forward to the discussion.
Hey, good afternoon, everyone. My name's Chad Cramer. I'm a partner at McKinsey. I lead our nuclear power practice, which is part of our electric power practice. But that includes everything from helping private equity companies thinking about how do I go invest in new nuclear, to helping utilities think about what role do they play along with hyperscalers and other off-takers, and then helping state and federal governments think about what can they do to accelerate new nuclear growth. I've been at the firm about 10 years. Prior to that, I was a nuclear engineer, started my career at Argonne and then went to the NRC and then to an A&E firm designing nuclear power plants. So anyway, been in the industry 20 years, and I'll tell you that this is the most exciting time that I've had in the industry. So it's very exciting, and hopefully the momentum stays and we continue to build.
I'm John Kotek. I'm Senior Vice President for Policy. Policy and Public Affairs at the Nuclear Energy Institute. Been there almost 9 years. Prior to that, spent a couple of years running the Nuclear Energy Office in the U.S. Department of Energy at the end of the Obama administration. Spent 12 great years living and working here in Idaho Falls, so it's great to be back. 2 of my 3 kids were born here, so very fond memories of being here and working at the lab and in the local Department of Energy office. At the Nuclear Energy Institute, we're the trade association for the nuclear technologies industry in the U.S. So all the companies that run nuclear power plants are our members, but as are just about all the vendors, suppliers, constructors, fuel manufacturers, labs, universities, you name it. One thing I just thought I would share is kind of building all this talk about the enthusiasm for new build. We recently surveyed our member companies to see just how much nuclear are they planning on bringing online. Now these, again, the companies that run our nuclear plants represent about a little bit less than half of the total generation on the grid in the United States. They tell us that they're looking at north of 100 gigawatts of new nuclear by the middle of the century. And importantly, almost or more than 23 gigawatts of new nuclear by 2040, which is a 50% increase over when we asked them the same question just last year. So this demand is really starting to turn into firm planning by our utilities in starting to move down the path towards a new nuclear project. So the conversation we're having here right now is very timely because the demand is going from kind of interest to real projects.
Great. I think we'll start sort of on the first movers side. So maybe we'll start with Cassie. Just talk a little bit about some of the first mover initiatives that you're working on at NASIO, how some of that support can transform into support and development for nuclear projects.
Sure, we were very excited to launch this initiative. It's in partnership with the Department of Energy GAIN, as well as INL and Oak Ridge, which is a fantastic partnership. And we are supporting the 11 states that have signed on to be first movers in this space, including the state of Utah and Wyoming, Indiana, Tennessee, Kentucky, Louisiana, Virginia, West Virginia, Maryland, and Pennsylvania. I'm sure I left out one, so apologies to whoever that one was. But these states, though, are really trying to take action quickly to send a signal to the market that they would like investment in their states. They want to de-risk. They want to figure out what collective policies they might be able to launch with each other to create an environment that can support the development of nuclear power in their states. One of the major initiatives we just launched last week was we released an RFI to try to understand what strategies would be most helpful to develop an order book for the states. And so it's on our website. I'll send the link over to our colleagues at WGA to share with the participants. But we are inviting responses from the private sector, from developers, from utilities, from others. And we want to get feedback on what technologies might be appropriate to include in an order book. We're looking at AP1000s, at SMRs, et cetera. And the idea is that the states will look at the responses and see what opportunities there are to create a shared order book, how they can engage the utilities on that, and also what other additional policies might be appropriate for states to undertake to create incentives and de-risk. We've heard that workforce is a major potential role for states to play. That's certainly important. We've also been seeing, of course, task forces that have been launched across a number of states, including the state of Idaho now, which is fantastic. And so anyway, this order book, as well as some of the feedback we receive from the private sector, we hope will inform some of the strategies that the states will undertake.
And I guess from sort of a market perspective, what are some of the most significant policy and market barriers that kind of stand in the way to securing investment for nuclear projects, especially if you're a first mover or a first of its kind project? I guess maybe we can start with John. And
Sure. A couple of things, and some of this came out on the last panel, right? I mean, the big thing that we're seeing and then I'm hearing about from our utility members certainly is that concern about the potential for cost overruns. And so getting some sort of a policy in place that's going to enable the federal government, along with project participants, to share in some of that initial deployment risk. I think that's the absence of that is probably the single largest barrier. There are other things that have been a problem historically, frankly, with the earlier discussions, of course, about permitting. That was a real challenge for a while. That seems to be heading in the right direction. Certainly work to be done there, but happy to see that moving forward. Frankly, public opinion was an issue. We're seeing that improve. I wouldn't try to go build a new nuclear plant everywhere, but there are a lot of places that are welcoming of new nuclear projects. Certainly policies to get workforce and supply chain accelerated are going to be very helpful if we can get to that. And in particular, the fuel supply issue, there's real concern among advanced reactor developers about the lack of availability of high assay, low enriched uranium fuel. Frankly, that was one of the drivers, I think, behind the administration's decision to make some plutonium available, stop the dilute and dispose program, because that can be a substitute for the high assay LEU in some reactor applications. So there are a range of things that deserve attention and that are going to be important to getting us across the finish line. But if I had to just pick one thing, it would be, let's get some sort of a risk sharing policy in place that enables, frankly, public utility commissions as well as utility boards of directors, et cetera, to have confidence that they can take the step and place orders.
I would echo that. Just putting on investor's hat for a second. I think they tell you that the key hurdle is just the cost overruns, and that needs to be solved in order to go raise money at reasonable rates in the capital markets. And, when you look at past projects that have been built, cost overruns have typically been borne by ratepayers, by a national or, national government or a sovereign fund when you think overseas, or, to a lesser degree, an OEM or an EPC provider that have provided certain guarantees in the project. And so, I think key for the industry is to find a risk-sharing mechanism that socializes those risks, or, not socialized in the sense of across the entire, world, but sort of within a project finance structure, kind of shares that risk and the reward most appropriately, and prices that risk in the best possible manner by someone who can actually take that risk. And so, I think we have started to see some creative approaches to that. I think the introduction of hyperscalers kind of into this conversation has created new opportunities for risk share. We've talked about it. They have a lot of money. They've got a huge need. At the same time, they're not going to be reckless. So we need to, and we probably don't want them to be reckless in the way of just throwing money around. And so, we need to find ways to incorporate, that demand into the project structure, isolate ratepayers. I think the programs that the federal government has are, super helpful in terms of the ITC and the LPO and, some of the other programs that are there. But I think ultimately you have to be able to tell an investor that the cost overrun risk has been solved, and here's how it's going to be solved, and here's who's going to bear that. And it has to be credible to investors in order to be able to secure funding, in the capital markets that is attractive.
If I could add on to that real quick, great points there. I think maybe it would help to explain a little bit of the why we think this is an important policy. I mean, certainly from the perspective of getting new nuclear built, but why is it that a member of Congress like Senator Risch is introducing a policy like the ARC Act? Well, I think it grows out of his participation or his leadership in defense-oriented, national security-oriented committees in Congress. He understands, and others in Congress understand, the value of having a strong civil nuclear export industry. Right. And if we're going to compete and win in global markets, we have to start by building our technologies here at home and certainly here in North America. And so when you look at what a nuclear project delivers, right, when you engage in civil nuclear commerce with another country, you're not just selling them a product off the shelf and that's the end of it. Right. This is a relationship that can last decades, even up to 100 years, because you're going to work with that recipient country, training their operators, certainly building the plant, but helping their regulator get ready, et cetera. When the plant's running, you're going to work on things like physical security, cybersecurity, materials protection. There's a whole range of things, non-proliferation behaviors, a whole range of areas where you want U.S. behaviors and norms to be the global standard, right? And Congress gets that, and they see the value in that. When I was in government, I saw the value in that. And that's why we as a country and as a government work so hard to help our exporters compete and win in those markets. And let's face it, Russia, China, those are state-owned enterprises our companies are trying to compete against. And so we need to do what we can, use the tools that we have in our toolkit to help our companies be in a better position to compete against those countries. That's why Congress has an interest in doing something like this for nuclear that they might not with some other sector.
The only thing I really liked what you said about appropriately pricing the risk. Well, like what is the value of that risk? And right now the answer is really high, right? Because the risk is so high. And so I think that solving that, to your point, solving that problem is like the key to getting nuclear built. How, if I can't get the risk down of cost overrun, then inherently I'm going to want a massive return on it, and it's just going to price it out of the market.
So we talked a little bit about risk sharing models and even working across other countries internationally. Talk a little bit more, maybe specifically about the role of partnerships in developing these technologies and projects, and especially public-private partnerships, what the role for that is, what some of the challenges are in communicating what those projects look like.
Yeah, I'm happy to start. So I think there are many different ways you can set up these public-private partnerships. The one that seems to be getting the most traction is having an agreement for a public offtake of power. I think, a government-owned PPA, which I think, or government purchase PPA, which I think somebody talked about in the last panel. So the good news is, you have a guaranteed price point for the power that you're selling. The challenge is, it doesn't necessarily solve that early cost, right? The early construction cost. And so figuring out a way to make, to be able to take that PPA and figure out how do we do this upfront for at least some portion of it to drive down that risk, I think would be vitally important to get seeing these things get off the ground.
Yeah, I agree with that. I think, it's going to take a whole host of different parties to put, these large scale infrastructure projects together. You need the private sector for, some of the technology development, the creativity, the risk appetite. We certainly probably need the private sector investment community. There's a ton of infrastructure funds that want to put money to work in, long-term, large infrastructure projects. But I think we ultimately need the public sector too, just with to provide stability, to provide the right incentives, to think long-term about the goals and the policy matters. So it's going to take everybody to put those together. I agree with you. I think governmental offtake kind of agreements that have a sliding scale PPA that can absorb some of those cost overruns is potentially a mechanism that is part of the pie that helps solve the risk problem. We've seen that come up in a few places. I think hyperscalers potentially fit into that box as well. So that's those are some of the tools. So that's a couple of the things that we've been thinking about.
I'll also just add that from the kind of state policy perspective, we've already talked about the importance of sending the signal to the market, of course, but states are also looking at this very much from the economic development perspective. And so in addition to financing the project itself, making sure that there are wraparound services on the ground, that there's an appropriate amount of funding so that when these projects are taken off, the community can continue to support it and is proud of the project itself. And so one of the things outside of financing, but in the funding world, we are seeing is states starting to launch some grant programs and other projects to support the project itself, as well as the wraparound types of services. And these are all often small amounts of money in the scheme of the larger projects, but is, again, a signal that they are willing to contribute to the project and to making the program a success.
Yeah, I know in Washington, there was a grant for Energy Northwest to work with one of the new SMR developers out there, which is really helpful in terms of getting that project off the ground. So when you think about when the government can be involved, it's on the kind of initial phase of development and kicking it off, and then potentially on the backside if there's kind of issues with cost overrun. I think the project in the private sector or governmental sector and the folks that are involved, can handle everything in between those 2 points, I think.
One of the really promising thing that's out there, I think, is this growing set of conversations around states working together to try to catalyze the formation of order books. I love what NASIO is doing. We've of course heard about Idaho, Utah, Wyoming working together. I think there are other conversations going on out there too. One of the things I hear from our supply chain members at NEI is you heard talk about the first renaissance before, right? And I mean, let's face it, what happened the first time around was nuclear got fracked because gas got really cheap and the economic case for a lot of the plants that were proposed just evaporated. This time around, things seem to be different for a number of reasons that I won't go into. But one of the things I hear from supply chain members is we were promised a big book of business that never materialized last time around. We're waiting to see, right, not just onesies, twosies, before we really tool up and start investing in machinery and workforce, what have you. We want to see firmer commitments for multiple projects. And so the more that can be done to help, create not just onesies, twosies, but 8, 10, 12 of a given design, I think that can really help us go a long way.
I think, Abby, so the interesting part here is that we're not answering your question, right? And the reason is there's not a great answer. If we knew the answer, we had the perfect answer, everybody would be doing it right now, right? And so it's very dependent on where you live, what state you're in, what are the rules associated with your state? Are you regulated, deregulated? Do you have zero emissions credit? Do you have hyperscaler demand? what's your use case? Like all of these things really matter to answering this question. So like, I wish we could just give you the silver bullet, but unfortunately for everybody, it unfortunately happens to be a bespoke answer.
Yeah, and to that point, different states are trying different things depending on their own context. And for those of you who don't know my colleague Christy Hartman over here up against the wall, say hi, Christy. Christy leads our state both regulatory and legislative engagement. She keeps a compendium of what different states are trying. That could be a great resource. I know NASIO does some great things, NCSL as well. So just for those of you who are thinking about what sorts of policy levers might be most effective in your context, we've got some good resources as to others.
Yeah, and I think from sort of that market signaling aspect, are there specific mechanisms that have proven effective at de-risking projects or helping attract more investment?
I think we're still in the early innings of that. I think that's what the industry is trying to figure out is how do we put together these projects, solve some of these risks, allocate both the risks and the rewards of nuclear projects, particularly when you get into first of a kind discussions. I mean, if you can successfully develop a first of a kind technology and project design and commercialize that, I mean, there is huge upside for somebody in that, right? And you got to fairly allocate that upside to get the incentives right and get the commitments right from everybody to ultimately be successful in doing that.
I think we know what success looks like. Ultimately, we have to get to this order book, the sustained program of new build, right? Look at the example of China. They brought on about 24 new reactors onto their grid over the last decade or so. And that went so well, they're building 30 more, right? Because they are now at that place where they've got a couple of designs that they repeatedly build around the country. And we saw that Japan got there in the 90s and aughts, and South Korea got there, and France before them. We know what success ultimately is going to look like. The struggle is finding that right set of policies that's going to help get us up and running.
Let's talk a little bit about offtake. Are there, how important is early engagement with off-takers? How difficult is it to communicate the benefits of nuclear energy there? What's been your experience in that sort of sector?
So it's a great question. So I think the answer really comes down to what is the problem you are trying to solve? If the problem you are trying to solve is my state is capacity constrained, then it is and I need to bring power in for my residential and C&I customers. That is one problem. If the problem is, hey, I've got hyperscalers that want to build in my state and they're eating up the capacity, that's a very different problem. And so if you are, if it's with the residential customers that you need to talk to or that you need to get on board with building new nuclear, unfortunately, the easiest way to do that is do it in places where nuclear already exists and they are already fans of it. For new states, it is quite a bit of outreach and figuring out, what is the impact to my residential customer going to actually be over the capital recovery period. If it's with a hyperscaler or a non-traditional off-taker like a chemical company, the answer is slightly different, right? Like if you're looking for funding, like what I'm seeing anyway, is a lot of the hyperscalers are actually coming to you to say, I want to build nuclear in your state. How do we partner on this and work together to be successful? So I think the answer depends on what the challenge is that you're facing.
I'll just add that, I think that all states that we've spoken with view this as a massive opportunity, right? The amount of investment that is coming into our country for these hyperscalers for AI is tremendous, and capturing that potential can lead to enormous benefits for people in the states. And so while there are a lot of challenges with getting this amount of power online so quickly, the opportunity is absolutely tremendous. And so the engaging with off-takers, you're absolutely right. I think it does depend on the customer, but the power needs to get on the grid, period. And sometimes it'll go to one project, sometimes it'll go to the grid. That's up in the air. there has been a lot of questions from states raised in particular on public engagement, right? Is even though we in this room know that nuclear is coming and it's coming fast, it's unclear if everybody else knows that. And so there is a lot of time that's being spent engaging with communities, local governments, people on the ground who they may have been upset about a wind turbine, but how are they going to feel about when a reactor is nearby? We don't know. And so there does need to be some real honest public engagement to demystify investments in nuclear. And that's part of, I think, the policy suite and the program suites that states are considering as well. And we're seeing great examples in Indiana, for example. They have a phenomenal program where they go into the communities and they can essentially get that stamp of, we're here, we're open for business, we want investment in our state.
Yeah, and we'll have a session tomorrow that's looking at some of the elements of building public trust, doing stakeholder engagement for nuclear projects. But I think from your perspective, especially at NASIO, what's your experience been with those conversations? And have they been generally positive, or is there a lot more messaging that needs to go into them?
Sure. I mean, the energy offices have been building relationships, of course, with the communities in their states for decades. And so there are longstanding relationships there. The nuclear conversation is old but new, and so it depends. But those are evolving. There are new strategies that states are using, and working with a trusted partner in particular is key. And so it may not always be the state that comes and knocks on your door and says, let me tell you about this new great idea. It might be someone in the community that they have worked with in the past. And so I'm sure that the panel will dive into that more tomorrow too.
Yeah, back on sort of the collaboration partnership topic. Obviously, working with communities, utilities, developers is all important, but specifically here with the role of the federal government, how can federal programs or policies be more supportive to sort of market signal for nuclear projects and help attract investment?
Well, certainly, things like the Advanced Reactor Demonstration Program have been really big, in terms of federal partnership, helping private companies move their technologies forward. We heard, of course, on the last panel about the Loan Programs Office, which has, I think, a huge role to play, and we need to make sure it's sufficiently resourced. One thing that's kind of a wild card right now, I figured I'd throw it out there just for fun, is, we do have an administration that has been cutting trade deals with other countries and that call for a lot of direct foreign investment. And you look like a country like Japan, which is apparently reportedly pledged to invest more than $500 billion in the United States. We have very strong nuclear energy partnerships with Japan. What about the Japan Bank for International Cooperation as a partner in a project like this, right? Sort of supporting projects commensurate with the amount of supply chain. Because let's face it, there are big, particularly in some of the larger reactors, there are components we can't make here in the US anyway. We're going to be reliant on some of these other long-standing nuclear sector partners. Are there ways that we can maybe make some of the tariff barriers a little easier to deal with in exchange for some sort of participation on the financial side? So something I've been stewing on. Don't have a great answer there yet, but nobody's walked off stage yet, so apparently it's not a simple idea.
That was our first response. No, I think it's a really good question. That's really interesting. I'd love to hear, from the folks that you represent, how are people feeling about the opportunity of the energy the domestic content bonus and the energy community bonus associated with the ITC? Do they think that it's possible to capture those, or do they think those things are long shots?
So I will say it's kind of all over the map on the domestic content bonus. And, again, some of it's going to depend on just how things are calculated, right? When it comes to the energy communities, that's, of course, we saw in the reconciliation bill that got modified a little bit to be a little bit more helpful. Frankly, I'd still like to see that maybe be even more inclusive, but it's, it's sort of headed in the right direction. So we do have quite a number of our member companies who think they're going to be able to take advantage of that.
I know, speaking for the municipal sector, there is the possibility for direct pay on certain of the credits, and that was seen as potentially very helpful to the sector because a lot of the tax credits that have been created for renewables, you could only monetize to the extent that you actually paid taxes, which means that a not-for-profit or a municipally owned electric utility couldn't actually take advantage of them directly. You'd have to enter tax equity partnerships or other types of structures in order to monetize those. I think there was some frustration with the rulemaking around direct pay. It wasn't as clear as it could have been, and there hasn't been as much uptake in terms of municipal entities taking advantage of some of those credits directly. So I think to the extent that we do see municipal participants in nuclear projects that can take advantage of the ITC, making sure that those rules around direct pay and the reliability of the rulemaking and all that gives people enough confidence to actually kind of lean into things, knowing that they should be able to realize that.
Okay. We've obviously, I think, heard that there's a large appetite to build out a lot of these projects and to do a lot of this work. So looking ahead, I guess, what policy actions would be the most impactful for scaling nuclear projects, whether that is first movers and supporting first mover projects or just scaling up technologies?
It's been a topic on a couple different panels, but just kind of speed to be able to put projects together and execute. Time is not friendly to finance or the cost of projects. The longer things take, the exponentially expensive they get. You have capitalized interest. You have just delays. You have the faster you can make money off something, the better off everyone's going to be from just a return perspective, from a viability perspective. And so the faster we can put projects together and implement, I think from the regulatory side, permitting, construction, labor, all that factors into the equation on speed. I think that's probably number one. And then, again, allocating the risks and the rewards appropriately to incentivize investment.
Yeah, I think that's right. I think, one thing that we've been hearing from the OEMs and from hyperscale, everybody that's kind of part of this ecosystem, when thinking about what state to go build in, their number one reaction is, don't make it harder for me to build in your state than the federal government is going to make it for me to build. Right. So, I'm going to have to go through the NRC process and I'm going to have to deal with the federal regulators. The state process needs to be less cumbersome than that and get done faster so it doesn't delay my project at all. And one of the things we found, and Cassie would love your thoughts here, is that a lot of the states have a difficult time fully explaining what it would take to license a nuclear power plant in their state. And it took them actually having to go look into it and say, oh, wow, I didn't know that we would have to go through some of these steps, but yes, it turns out we will. And so now I think they've come around to that, but I don't think in the beginning everybody had a full appreciation of what it would take.
I think that that's probably true. I think a lot of states would say that, like any large organization or a company, there are silos, and it sometimes takes a long time to break those down and figure out who is dealing with what aspect of an issue. But I think that today's conversation has pointed out a number of strategies. I think that obviously streamlining and understanding the permitting process in particular in the state is critical. That's something that is achievable, that can be done. Having this one-stop shop idea is obviously something also that seems like some low-hanging fruit, although it's going to be more difficult probably now that I've said that out loud. Beyond that too, though, to the extent that it sounds like it would be good if states can figure out how to work together and help implement some of the strategies for an order book, how to work with utilities and developers so that we can get a relatively large amount of orders in at one time to give some sort of a signal to the private sector that they can invest in that type of technology. And so it seems like that also is a promising approach.
And one other thing to look for, and I know we're going to talk public perception and acceptance tomorrow, but as states are getting ready to welcome projects like this, being ready to describe both the regulatory role, but also to assuage some of the concerns that I'm starting to hear out of some really unexpected places. For example, there's a narrative taking hold in some quarters. I won't name names, but you might be able to figure it out. That, boy, if we welcome nuclear projects into our state, it's going to make us a target for nuclear waste disposal. And then sort of mixing up things like the Hanford waste tanks with dry storage of spent fuel. There are a lot of things that are kind of taking hold, particularly in states that aren't familiar with nuclear right now, that I think policymakers, state officials need to be prepared for. So things don't go off the rails early on in your development of nuclear projects.
Okay. Any questions from the audience? Lost my mic, so I will run.
Hi, Jake Dubbs with Southwest Power Pool. I think it's great that all four of y'all on the dais actually are either partners with SPP or our member companies use your services, and really enjoyed hearing your discussion today. As far as challenges to investments and capital, I'm wondering if anyone could talk about challenges or reservations you're seeing in regards to getting the start time for nuclear resources shortened. Is that something that the private capital has voiced concerns over? Do we anticipate SMRs to drastically reduce start times for nuclear reactors? Your thoughts?
And when you say start times, you mean actually starting electricity generation, like the total project schedule?
Correct.
Yeah. Okay. Yeah. I mean, certainly SMRs are sort of designed with that in mind, right? Bring a lot of the fabrication back to the factory and minimize the amount of kind of on-site bespoke construction that needs to go on. So yeah, take the example of Ontario Power Generation up in Canada, right? They've just broken ground on their GE small modular reactor design. They say they're going to have that up and running 2030, right? So yeah, that's certainly considerably shorter than what Vogtle was delivered at. But even you look at the experience in other countries, even Japan, when they were building advanced boiling water reactors back in the 90s and the aughts, they were a little over 3 years from first safety concrete pour to fuel loading. And certainly there are things before that and after that. But it gave you the sense that this wasn't a 10 to 12 year project. It was more like 5, 6 from start to finish. So experiences in other countries have shown once you get rolling with these things and get the sustained program of new build, you can get pretty good at it.
Yeah, I would say every SMR company we talk to right now, their two focus areas are, how do I get construction cost down? How do I get schedule down? Right? I mean, that is their sole focus. Well, let's finish the design too. But beyond that, those are the two things that they're the most focused on. So I think the entire ecosystem gets like, hey, we got to get the schedule down to the point that you were making earlier about, time doesn't bode well for capital. And so, getting COD accelerated is mission critical.
Thank you all for coming. Just a question on, actually 2 questions. I'll ask one, then I'll just have a quick follow-up. But, Microsoft is apparently invested in Constellation Energy, and Bill Gates is in TerraPower, and Altman's in Oklo, and Bezos is in General Fusion. What has this done to the marketplace in general of attract, and Blackstone supposedly is involved also in nuclear energy? What does this mean when those type of investors are putting a lot of money into this industry, and has that actually helped other capital come off the sidelines to help this industry grow? And then I have just one quick follow-up.
Yeah, I think it's great that we've got, institutional capital, coming, smart operations coming to the sector and developing new technologies. I think it's helpful if they get to the point where they essentially backstop a project. They say, we are going to build this on our own dime, right, with our own equity, but that's really expensive capital for them. It's a lot of money. And so I don't know that any of them are prepared to do that yet. Maybe one day they will be, because again, if they can show commercialization of the technology, there's tremendous upside for them, right? So, I think it's great that they're all focused on it. They're putting a lot of money to work. If they get to the point where they will backstop a project and guarantee a price to an offtake party, whether that's a municipal utility, an IOU, something, a hyperscaler, that would potentially get the project sort of off the ground.
Yeah,
I think it really comes down to just solving that risk around the cost overrun, and someone's got to take that risk.
To that point, we helped the Department of Energy write the Advanced Nuclear Pathways report, and when we were working on that, which was this was 2 or 3 years ago, right? we talked to a bank that said, if you want to go build a nuclear power plant right now, we are going to downgrade your credit rating. And so, I mean, that was a situation we were in 3 years ago. And so the fact that, you're seeing the hyperscalers move forward, and then you saw all of the major banks come out, I think that was last year, where they said, we're all in favor of we're all pro new nuclear. Like the amount of motion that's happened in the last 2 or 3 years has been incredible from a financing perspective. So when you see Google and Amazon and Microsoft and everybody saying we're going to go support this, it is a massive positive momentum shift for the industry.
Just to follow up, this morning I was speaking with the CEO of Oklahoma, and he was talking about his capital raises, his recent capital raises. He's a public company, but he really hasn't gone onto the bank markets. He hasn't gone to the bond markets. He's just getting more and more equity. So at what point do you think that the balance sheets are going to start look like more normal companies where you see more debt? Is it just they have to deliver on an operating model and they just haven't delivered revenue and cash flow yet? Talked about like the capital structure you expect.
It's a great question. So here's what I would say. If you want to invest in if you're a member of the public that wants to invest in new nuclear, you have limited options. And so what we're seeing is a lot of people excited. A lot of people in the United States, for very good reasons, believe that nuclear is going to be part of our energy solution going forward. And there are a lot of people that want to make investments. And so what you are seeing is, when those opportunities are there, they're excited about the technology and they're investing. So the question is, when is it going to get to a more typical outlay? It's a fantastic question. If I knew the answer, I would tell you how to go invest your dollars. But I don't. But what I would say is, I think that the good news is people are investing. At some point, they're going to want to see delivery, right? And they're going to want to see things being delivered at, if you come in 10 to 20% over cost and schedule, I don't think anybody's going to lose faith. If you come in 100% over cost and schedule, it could be devastating. So all that being said, I think time will tell, but they're, very similar to Tesla. At some point they wanted to see revenue, right? And so I think you get a little bit of leeway in the beginning, but there's going to come a time when they're going to say, okay, like now's the time to start seeing money flow.
So we've heard about some of the supply chain issues and then the investment dollars coming in. I'm just wondering if there's been much discussion about we're signing these trade deals with other countries. I think the Japan deal's maybe the most interesting in this space, with a tremendous amount of foreign direct investment that's supposed to come into our country. It seems like this is one area where the Japanese dollars could be invested, and I don't know if there's conversation happening in that space with some of the other deals. I'm just curious what that piece looks like. We've talked a lot about Amazon and Google and these others, but I think it's another big pot of money that might be interesting. Just curious.
Short answer is yes. Yeah, and there's very strong partnerships between a lot of our nuclear supply chain companies. Certainly the GEs, Westinghouses of the world, but a lot of the smaller companies as well. And so I think that unlocks a real opportunity to attract potentially Japanese participation in other countries as well in early deployment of some of these technologies. Japan's particularly intriguing to me because they know they need new build. They have to build more nuclear than they currently have. They'd love to see us go first. And so to work with us, get some experience, get their supply chain kicked into gear, to then bring technologies there, I think actually would work really well to meet their.
I think what you're seeing is the supply chain world is going through almost like, what's the easiest thing I can do to kind of get the ball rolling? So I'll give you an example. So many private equity firms have come to us and said, I want to go invest in something that even if nuclear doesn't take off, I still have a chance of this thing being successful, right? So like valves, pipes, motors, pumps, like those types of technology that are definitely necessary for nuclear, but also have ancillary opportunities. So that was the kind of like that first chunk to start moving forward. I think that what you're going to continue to see is that the investments are going to get more and more detailed into the actual like nuclear fuel chain, right? Like who's going to go invest in conversion, who's going to go invest in enrichment. So I think you're going to see those things are going to start moving forward. And then at some point you're going to get the people that are going to say like, okay, I'm willing to take a bet on X technology or Y technology, right? And so I don't think we're to that. I don't think we're at the point yet where any country is willing to say, I'm picking a winner. But you are seeing this like continued momentum in that direction, if that makes sense.
We're going to talk a little bit more about supply chain tomorrow, but I was curious if any of you on this panel today have any ideas for innovative strategies for investors to invest in the supply chain today so that we can be ready for the projects when they come. Because if we wait until the projects come, the supply chain it's likely that they won't be ready. I mean, we lack the steel supply, the ultra large forging. Lots of the fabricators that were around decades ago don't have the NQA1 programs or the ASME Section 3 programs that we would need to build like an AP1000 today. We're looking to have 10 projects in construction by 2030. You know, how can we help these suppliers be more confident in making the capital investments that they need to be able to do these things for our projects so that we can make our components here in America for American projects?
It's a wonderful question. All right. So, I think one of the things that we've been talking about or kind of circling around is starting with like having a state consortium where you partner with where multiple states partner together to deliver an order book of projects. Alongside that, what also needs to happen is we need to be very smart about not overbuilding or underbuilding in supply chain. Right. What I feel like I'm starting to see, and Cassie, I'd love your thoughts here, but I'm starting to see certain states that say like, I want to be number one in nuclear. And so what you're starting to see is they're starting to kind of go off and start trying to invest in building their supply chain. And then the question becomes, well, are we really targeting the things that we actually need? So I think this is an opportunity to get multiple states to work together and say, one, we're going to go build 10 plants or 20 plants or whatever the number is, and we're going to go build the supply chain to actually manufacture these plants, and we're going to keep that, and we're going to keep the labor force in our states, and we're all going to play a role, right? This is kind of how Rolls-Royce is thinking about making the Airbus of nuclear in Europe, where the Czech Republic's going to make INC and somebody else is going to make fuel rods. Trying to give everybody a job so that you keep the talent inside, but also if you're going to build new nuclear and your company builds, we have the manufacturing in our state, you're going to build that type of nuclear power plant, right? So I think that's one thing that would make a lot of sense. And again, Cassie would love to hear if what you're hearing from that perspective.
Definitely. I think that there is a lot of collaboration between the states, also a race at the top. And so, we're seeing different packages put together in different states. Mississippi, West Virginia, Ohio have all passed legislation or are putting together kind of economic development packages that are incentivizing not only hyperscalers to come and locate in their states, but also the manufacturing for component parts that go into different technologies, and not just in nuclear, but in geothermal and some of the other technologies that are of particular interest right now. And I will say, shameless plug, there is a supply chain section on the RFI. And so if you all can go in there and provide a little bit of input, responses are due by October 10th.
We had a table of questions. Any significant renewable energy project today usually has market-based REC credits as part of the deal to make it happen in the end. You see some states and provinces getting cap and invest carbon funds off the ground. Can you speak to what the horizon for zero emission credits might be and potential collaboration with some of the approaches other states have taken with some of these other policy directions than for nuclear?
I think RECs are interesting. I think that's a market that has also had kind of its ups and downs. And so, the ability to monetize RECs, has come and go from time to time. And so, that takes a very stable regulatory framework because that's essentially a regulatory credit fundamentally. And so, I think those have some, some challenges, but I think they can be really interesting as long as the regulatory stability is there to kind of, monetize.
Yeah, I'd just say, I mean, that could be a really long conversation, right? But we are, of course, we're now starting to see some big off-takers willing to pay a premium for what nuclear has to offer, right? Frankly, we're also starting to hear some folks, in addition to the carbon-free attribute, starting to think about other ways to value the resilience attribute of nuclear. And, at least on the carbon side, of course, this is overlaid by there's an ongoing, update to the rules that World Resources Institute and another organization write for this accounting. So there's a lot going on, and how that all unfolds is really going to matter. As a nuclear person, right, frankly, the more people care about carbon, the more nuclear looks good. And so, would want to see those rules written in ways that continue to or increasingly value what nuclear has to offer.
We could go for a long time on this one. We've still got, when do you want to, we're starting to get into refreshment interference. So I'm not sure we want to keep going.
Perfect. All right. All right. Thank you so much, John, Chad, Kevin, Cassie. Thank you so much for being here, being on this panel. Yes, I will wrap it up so we can get to the reception here. Thank you all so much for coming today.